Hey Brandon, thank you for having us back here at Cross Country Mortgage. We want to know a little bit more about what a person should do or shouldn't do when they have been pre-approved and they want to get a construction loan to build their home.
So the biggest thing, man, that could hurt somebody and potentially kind of ruin a deal is one, getting your credit ran and then now taking a hit and your credit dropping within the 3 or 4 month window that we pull the credit report, and or switching jobs. Switching jobs probably being the worst, just because our credit report is good for a couple months. If you went and accidentally pulled it out of a car and you didn't end up getting the car, we'll still be able to use the old credit report. We would just have to then have a letter showing like why we did it or why we went and pulled out the car but we didn't get anything. But the biggest thing, man, is job switches. I had one. It was actually an out-of-town deal where she told me, oh, I'm getting offers from here and there, and I told her, hey, let's just stay at the current employer for the time being, and then maybe afterwards you can switch or potentially weigh out your options. I was like, because we're already kind of in the process, we're under contract, you already put a $3,000 earnest money down, like don't risk it. And one Sunday she calls, I'm at an open house, and she pretty much called, hey, just letting you know where I'm at, and I switched jobs, or I start my job Monday. It was the prior Monday, so she was about to take a week off and then start on Monday. And so for mortgage, we need 30 days worth of pay stubs, whether that's her getting paid bi-weekly, only being there half the check, regardless, as long as we're showing a 40-hour work week. If it's bi-weekly, 80-hour work week, we'll need 30 days of pay stubs. So with that, we were already toward the end of the contract. So now the listing agent calling, the brokers calling, hey, where are we at with this file? What's happening, this and that? They were like, hey, the sellers don't want to keep paying. We need to close this deal now. And again, we started kind of looking around, seeing what we can do. The employer ended up getting us what we needed, and we were able to kind of move forward and close the loan. But for the most part, that almost hurt us because we did go a down payment assistance route, and the numbers were a little bit tight. If she made over a certain amount, we weren't gonna now be able to qualify. So when she went and got that raise, it ended up being a little bit more difficult to like kind of see where we were at, and we didn't want to be over the threshold. So it was just a lot of back and forth, and it was like one of my first deals, man, and it was an out-of-town deal. So at that, I was stressing. I remember being at an event, we were like at a zoo kind of walking around, and she was calling me, having to tell me of the situation, and I was having to tell her, look, send me this, and we'll be good. But those are the biggest things, man, pulling your credit and then maybe job switches during the transaction.
All right, so moral of the story is let's be careful with the credit and avoid big life changes that can affect your credit or might hurt the deal, right? And with that in mind, has there been any like crazy scenario that you can think off the top of your head that has either killed a deal or really hurt a deal?
So man, I actually have. The biggest thing down here, man, and I don't know if it's a generational thing or just kind of like a per family deal, but people that want to buy a house and then don't save the money for it, like they'll send you their most recent bank statement and they're spending equally as much money as going in and coming out. And it's like they're going to SeaWorld on the weekends. They went to the Viper game with 10 of their buddies and they paid for all popcorn and drinks, and just that, man, you're buying a house, you're putting in a big investment and stuff like that, and seeing a bank statement, seeing somebody spend so much money, it gets a little bit worrisome. We had a deal, and me and the realtor would call each other every day like, man, we need to get it closed sooner, we need to get it closed sooner. We just weren't sure if one day these people could wake up and be like, you know what, we're going to Disneyland, and then book a $4,000 trip. And so the biggest thing was one of the borrowers had gotten like kind of a bonus at work, so we were just like, come on, please don't. And it was funny because she came and told us, oh, I just got a bonus at work. She came into the office, and she ended up telling me, yeah, like I said, hey, just don't spend the money, let's wait till closing, like we need to make sure we have the funds in there. She's like, oh no, we're good. But we did already book a Disneyland trip in 2 weeks, and it's like, oh my God. And I think I did see it when she sent the most updated like transaction history. Yeah, they still had money in the bank, but I could see like Disney and for $2,000, like they booked a trip, and it's just like, man, they must have not got any furniture when they moved in there, bro, because they did not. They were on the verge of spending it all within the week that we told them to wait it off, or the month or so that we were kind of giving them. But for the most part, man, it's just crazy where if you're trying to buy the house, just be a little bit more mindful of the spending, and then obviously you don't want to come into the situation where maybe you're lacking the funds, and at least at that point you'll have everything you need. There's not going to be any issues at closing. We're not going to have to go get a gift from your mother-in-law or your mother or anything like that, cousin. But it just to be saving, man, you want to make sure you have it in there with no hiccups and stuff like that.